Hello everyone, I am Trupti Pandya and today I will be teaching you Element of Account Standard 11 Part 2 Chapter 5 Financial Statement of Business Organization. In previous lecture we already completed up to trading account and profit and loss account and difference of trading account and profit and loss account, and afterward there is a balance about the balance sheet. Today let us start the specimen copy of a balance sheet. Here all the assets, liability, capital and current assets, fictitious assets, presentation of two type of balance sheet is there. Now balance sheet in order to permanency. Liability side we have to write the capital, non-current liability and current liability. And asset side we have to write non-current asset, current asset, loans, advances, fictitious asset which are shown here separate or can be deducted from the capital. This balance sheet is not an account, it is a statement. So we not write here debit and credit because it is a statement, and so we say that it is a left side and right side. Left side we have to write the capital and liabilities, and right side we have to write assets and receivables. Now balance sheet of in order of liquidity. When there is a liability, current liability, non-current liability and capital. And asset side we have to write current asset, loan and advances and non-current assets. Now specimen of balance sheet. No specimen of balance sheet is given for proprietary concern or partnership firm. For companies, specimen of balance sheet is given in Companies Act 2013. After considering the above particulars, the specimen of a balance sheet can be prepared as under. It is advisable to prepare balance sheet in important groups, assets and liabilities. It is not mandatory in the case of proprietary concern and partnership firm. At present, accounts are prepared in computer in which balances of accounts are shown under various groups. Specimen of balance sheet can be shown as under. Heading balance sheet of Sri, we have to write here a name. As on, here we have to write the last date of the year, 31st March or 31st December, whatever accounting year is there. Now, we have to write the left side liabilities. First write the capital. In capital, first of all, we have to write the opening balance of the capital, plus if any additional capital invested by the owner in the business, plus interest on capital, plus net profit which we brought from the profit and loss account, and less if any drawing is there, then we have to minus this amount, plus interest on drawing, plus net loss, and afterward write the remaining amount outer side of the column. General reserve we have to write here, capital reserve, other reserves. If any reserves are there, then we have to write here in liability sides. Workers' compensation fund, investment fluctuation fund. Now non-current liability, bank loan, other financial institutions loan, fixed deposit, loan taken from friends and relatives. Current liability, bank overdraft, sundry creditors, bills payable, outstanding expenses, income received in advance and workmen profit sharing fund. If any outstanding expense is there, it is our also liability. And if any income received in advance, then it is also our liability. Now we have to write the asset sides. Asset side, first heading non-current asset, fixed asset, goodwill, land, building, leasehold asset, machinery, furniture and fittings, patent, trademark, copyrights, livestock, vehicles, loose tools, government securities, provident fund investments, investment in share, debenture or bonds. Now current asset, closing stock, sundry debtors, cash balance, bank balance, store and spare parts, income receivable. If any income receivable is there, then it is our asset. And loans, land and bills receivable. Bills receivable is also our asset. Now liability side, provision for tax, provident fund. And loans given to employee, it is our asset. Advance paid for purchase, it is our asset. Expense paid in advance, then it is also our asset. Expense is not written off and losses, deferred revenue expense. Two structures prevail for presenting balance sheet. Horizontal of a T-form balance sheet, in which liability are shown on the left hand side and asset are shown on the right hand side. This type of form is shown above. This balance sheet is T type of balance sheet is there, left side and right side. Two sides are there. And vertical or I form of balance sheet which can be prepared as under. But as per our exam purpose, we prepared this T type of balance sheet. This is only for the knowledge. Balance sheet of Sri, here we have to write the name as on 31st March, otherwise 31st December, whatever last date of the year. Now left side we have to write here, in this type of balance sheet there is left or right side is not there. We have to write all the information in one column particular. Afterward amount rupees and amount rupees. Owner's fund, A capital, opening capital plus additional capital, interest on capital, net profit, and afterward we have to write the amount here. Less drawing, interest on drawing and net loss, and afterward outer column we have to write. Now total of this both. Afterward reserve and surplus. General reserve, other reserve, minus fictitious asset, net owner's fund, and afterward we have to write the outer column. And this both the totals we have to write here in third column. Non-current liabilities. Secured loan, unsecured loan. Total of this both the amount we have to write here. Current liability provisions. Make the total and write here. Total we have to write the here. Now assets. Non-current liability, gross fixed asset minus depreciation. Outer column we have to write the total. Afterward investments we have to write here, and total of both the amount we have to write here. Current asset, loans and advances. Current asset, loan and advances, we have to write the outer column. Now comparison of trial balance and balance sheet. It means a difference between the trial balance and balance sheet. First of all, meaning. Statement showing debit and credit balances of an account is called a trial balance. Here, statement showing the financial position. Here, debit credit balance, and here financial position of the business on the particular date is called balance sheet. Now, objective. The objective of preparing trial balance sheet is to know the arithmetical accuracy of the account. That account is correct or not. Arithmetically it is correct or not. The objective of preparing balance sheet is to know the financial position of the business. Here arithmetical accuracy and here financial position. Time of preparing the statement. Trial balance is prepared before preparing annual account and sometimes more than once during the year for checking the correctness of the account. Balance sheet is generally prepared at the end of accounting year. It is a part of annual account. Sides. Trial balance has two sides, debit and credit. Balances has two sides, liability and asset. Accounts to be shown. The balances of ledger accounts, personal, real, nominal accounts are shown in the trial balance. In balance sheet, the balances of personal and real accounts are shown. Necessity. It is not compulsory to prepare trial balance. The preparation of a balance sheet is essential for the company form. Balance sheet is to be prepared in the prescribed form as per Companies Act 2013. Seventh one, adjustment effect. It can be prepared without incorporating the item of adjustment. In trial balance, there is no adjustment is there. But in balance sheet, it cannot be prepared without incorporating the items of adjustment. When we prepare the balance sheet, at that time, all the adjustment included in the balance sheet. Net profit, net loss. Information about net profit, net loss is not available in trial balance. Information about net profit, net loss is available in the balance sheet. If a net profit is there, then add in capital. And if net loss is there, then deduct from the capital. Now, illustration number 4. In this illustration of annual accounts excluding adjustment. In illustration number 4, we prepare trading account, profit and loss account, balance sheet And if other information is given, then what is the, if below the question, if trial balance, below the trial balance, if any other extra information is there, it is called the adjustment. And if this adjustment is there, these adjustments always two effects are there. Let us start. Illustration number 4. Prepare annual accounts of Krupa from her trial balance as on 31st March 2015. Trial balance of Krupa is on 31st March 2015. Question part. Trial balance is given. Opening stock 60,000. Capital and drawing. Here capital and drawing is given. Drawing always debit and capital always credit. So credit side amount is given, it is called the capital, and debit side amount is given, it is drawing. D for drawing, debit. C for capital, credit. Building, it is an asset. An asset always debit balance is there. Machinery also asset, debit balance. Furniture fitting, asset, debit balance. Purchase and sales. Purchase always debit, sales always credit. So credit side given, it is sale, and debit side given, it is purchase. So purchase debit, sales credit. Wages, expense. Carriage inward, expense. Purchase return minus from the purchase. Sales return. Purchase return always credit and sales return always debit. Discount allowed, expense, so debit. Discount received, income, so credit. Salary expense, advertisement expense, rent and taxes expense, interest received, income, credit. Stationery and printing, expense, debit. Cash on hand, all current asset, always debit. Bank balance, current asset, always debit. Bills receivable, asset, always debit. Bills payable, liability, always credit. Debtors, always debit. Creditors, debtors D, debit. Creditors C, credit. So this way, all the information is given. The cost price of stock as on 31st March 2015 was rupees 10,000, whereas its market value is 12,000. Here 10,000 and 12,000. Here our rule is there that if a closing stock is given, then we have to compare that it is cost price and market price. Whichever is less, we have to use in our sum. Now let us start. First of all, we have to write trading account. Trading account of Krupa for the year ending 31st March 2015. We know that trading account debit side, we have to write the opening stock. Afterward, purchase minus purchase return and purchase related expenses. Here two expenses are related with purchase, wages and carriage inward. Afterward, credit side we have to write sales minus sales return and closing stock. Closing stock is given 10,000 and 12,000. From this 10,000 and 12,000, 10,000 is less amount, and so we have to write the less amount because there is a rule is there, book from the book value, otherwise cost price and market price, whichever is less. So less amount is 10,000, so we use here 10,000. So let us start the trading account of Krupa for the year ending 31st March 2015. Debit side particular amount, credit side particular amount. To opening stock 60,000, to purchase 1,15,000, whichever given in trial balance, minus purchase return 14,000, outer column 1,01,000. Wages in our trial balance it is given 1,500, to carriage inward it is given 3,000. Now sales credit side we have to write 3,16,000 minus sales return 10,000. So outer column 3,06,000 and closing stock 10,000. 3,06,000 plus 10,000, 3,16,000 minus this all the expenses, then difference amount is 1,50,500. It is a gross profit transfer to profit and loss account. Now let us this amount 1,50,500 directly we transfer here. Credit side of profit and loss account. These trading accounts, gross profit, we transfer here profit and loss account credit side. By gross profit transfer from trading account 1,50,500. So this amount first of all we write here, and here if any income is there, then we have to write the credit side of profit and loss account, and if any expenses are there, then we have to write here debit side, because we know that profit and loss account is nominal type account. So when there is expense is there, then we have to write debit side, and income is there, then we have to write the credit side. Now after gross profit, discount received 3,000 and interest received 1,000, it is a income. Discount given, expense 8,000, salary 48,000, advertisement expense 4,000, rent and taxes 1,500, stationery and printing 2,000. These all are expenses. These all are income. Now income side, credit side, we see 1,54,500 is there, and from this all the expenses we minus, then we get the difference amount 91,000, and this 91,000 is a net profit, and this net profit we have to transfer to capital. Transfer to capital, it means we have to add in capital, and capital we know that in a balance sheet left side we have to write the liability. Let us start the balance sheet of Trupa on 31st March 2015. Capital 2 lakh, which is given in our trial balance, plus profit transfer from here in profit and loss account, add. If profit is there, then add. If loss is there, then minus. Here profit, so add 91,000. 2 lakh plus 91,000, then 2 lakh 91,000. Minus drawing. Drawing is given in our trial balance, 12,000. 2 lakh 91,000 minus 12,000, then we get 2 lakh 79,000. Non-current liability is not there. Now current liability, bills payable 6,000, creditors 60,000. Now total of the liability side is 3,45,000. Students, when we write the balance sheet at that time, liability side and asset side, both the sides total is identical, means equal. Non-current assets, building 1 lakh, machinery 50,000, furniture and fitting 10,000. Current asset, cash on hand 10,000, bank balance 80,000, bills receivable 5,000, debtors 80,000. Again we write here closing stock, because rule is there that below the trial balance, if any extra information given, it is called adjustment. And when there is a adjustment is there, then for the adjustment always two entries are there. So closing stock, we write the trading account credit side, and here closing stock is the asset, and so we write in a balance sheet. If closing stock is given in a trial balance, then only one time in balance sheet asset side we have to write. Please note down this thing properly, because it is very important. Now for the adjustment. Adjustment means on the basis of transactions taken place during the year. Journal, ledger and trial balance are prepared. Those transactions which are recorded have effect on the trial balance. Adjustment means those financial transactions of a business which are not recorded or wrongly recorded in accounts, and it is required for rectification. Any changes are necessary and any rectification is necessary, then it is called adjustment. According effect of adjustments are given to know the true and fair profit and loss of a financial position of the business. Now let us understand adjustment about different particulars with illustration as under. Rules for adjustment effect. Remember following information at the time of giving effect of the adjustment. Give the debit effect and credit effect of the same amount of adjustment. If debit effect of adjustment is rupees 10,000, then credit effect has to be 10,000. As per rule of debit and credit effect, adjustment effect will be given in trading account, profit and loss account and balance sheet. So this is our rule. But adjustment we start tomorrow. Thank you very much.